Welcome to Building Web3. Today we interview Rob, who's had an exciting career at MIT and the Bank of England working on blockchain initiatives. Now he's creating a new company, Wadagso, to transform the financial system. Remember, nothing stated here is financial advice. Welcome to the Building Web3 Podcast. Today we have my good friend Rob. He's a founder at an exciting startup called Wadagso. Rob, could you give us a brief background into what you were doing before you came to Web3 and what was your come to crypto moment?
So before I started the company, I was working at MIT. I was in the Digital Currency Initiative. So I was there for about 3.5 years. And yeah, I mean, I came across Bitcoin in 2013 as part of my prior job when I was at the Bank of England because it sort of started to become, I think it was the first big spike. It got up to like $1,000 or something like that. And it started to come down again, but I think that had caught the attention of the sort of more mainstream financial press. So I was tasked with a couple of colleagues to sort of look into this, and we wrote a report about, what is Bitcoin, what is digital currency and whatnot. And then that led to the creation of the Digital Currencies team at the Bank of England, which I set up in 2014. And then in 2016, I went to MIT, so I was there for about, 3.5 years. And then started with Wadagso in 2020 in the summer, almost 4 years ago.
So fair to say you've been in the crypto sphere for a very long time.
Yeah, just over 10 years, yeah.
Wow, that's there's only been a few guests we've had that have had that length. Griff from Giveth is one, and another would probably be Vinay from Ethereum. He worked on the initial Ethereum launch. Very cool. So could you give us a brief overview into Wadagso and what is its mission and what's the goal of the company?
Well, I think the goal is to really, make the financial system more efficient, more secure, more stable. And I think that, and more equitable. And I think that really, when digital currencies came along, I first started looking into that. Obviously, it was like, the financial crisis happened in the previous sort of few years, and we were sort of dealing with the aftermath of that. And I thought, well, and all the regulations were changing. There was a lot of focus on changing the regulations, but I always thought, actually, it's going to be the technology. It's going to be changes in the technology that really transform the financial system. And so I was sort of been thinking about this, 2012, before I became aware of Bitcoin. And then when Bitcoin came along, I just thought it was really interesting because I thought, well, I think there is the seed of a real transformation to the financial system in this piece of technology for all its faults and for all its flaws, and it has them. I thought there was something really interesting in there. And I think it really boiled down to a couple of things. One is it shows you can make digital payments without institutions. I think that was very interesting. So you could basically, Lawrence Lessig wrote a book called Code and Code 2.0, which talked about, architecture, norms, laws, and markets. And this really reflected a shift from laws and institutions to architecture or technology. And I thought that was a really interesting shift. And then the other element was programmability. So basically it allowed money to be programmable for the first time, which I thought was very interesting. And then that gets you into the sort of automation, artificial intelligence. If you've got a platform that can execute payments and execute, the transactions, all these pieces fit together. So, so I think the vision for the financial system is to think about how can we get better data? How can we get more automation, more efficiency? And how can we make those things work together to get a better financial system?
Absolutely. And so at its core root, what is the service, or is it largely a research institution that Wadagso?
No, we're a company. I mean, we came out of a research group at MIT, so that's sort of our roots are in research. And I think we want to think deeply about the technology and how it should work. But I see that there's sort of, at the moment, two elements, but I think that, ultimately a third element to the business. And the first two are really about foundation building. So digital currency itself is where we started, and that's what we sort of help, financial institutions with. Is like the actual base level technology about how does it work? What can you do with it? Tokenization of money, tokenization of assets, how are they going to switch, all that sort of base level infrastructure. So we work on that, and we've worked on various different pieces of software to facilitate that. And I think that's helpful because, again, I don't think there's any one piece of software out there that's cracked it perfectly, or one platform that's out there cracked it perfectly. So I think that with every increment, with every how can I put it, version of the technology, you see, we get some insight. So when Bitcoin came along, we got some insights from that. When Ethereum came along, we got some insights from that. And as we build on these technologies, we'll get insights from those. So I think they're really useful experiments. So that's one element. And that was really the starting point for us, because we came out of, that was the work we came out of, helping really think through this infrastructure, how it would work. And then the second piece, and that's something we started working on last year, was the data piece. And that's something that, again, I worked on previously, because I knew good quality data is fundamental to a better financial system. So you can understand what you're doing, you can see what the assets are, you can visualize them well, all these type of things. So we started last year on thinking about how do we build better data products that people can make better decisions. And that's the sort of current, the current platform, or, so there's those two things in parallel. And then the third piece, which I think is for the future, is thinking about automation, artificial intelligence. Because I mean, the more you work on this, and we didn't work directly on AI ourselves, but we had colleagues at MIT who worked on it. The more you can see all these things are linked together. They don't exist independently. You've got the infrastructure. The new infrastructure gives you better data, and it allows you to automate execution of decisions. So that's two links. And the better financial data feeds in to ultimately a machine making more and more of the decisions. And I think that's where we want to get to, is thinking about, okay, the data gives you the information, the new infrastructure allows you to execute the decision, but in between that is the artificial intelligence that pulls in the data, executes the decision, and then also the new platform gives you better data. So there's this sort of circle of execution between those three things. So I think all those three things are interlinked, and I think it's sort of inevitable that if you work in this field, you're going to end up working with artificial intelligence.
Absolutely. So let's talk, because we have this three-pronged system. We've got the infrastructure, we've got the data, and we've got the AI. Let's talk a little bit about each of these, but let's first start with infrastructure. So What kind of infrastructure is necessary to facilitate the other two, like the better data, the AI?
Well, I think there's really two elements to it. There's what data is it producing, as it, if it's blocks, as it produces blocks, like what's the structure of that data? How can you extract insight and information from that data? How can you visualize it? So that's one piece. Is like what data is coming off the blockchain as it executes transactions. And then what is the scripting language that allows you to execute the transactions? And how do you get the right balance between, expressibility and functionality and security? Because that's one of the most important balances to think about. Well, okay, we want to automate everything, but also we want to make sure that we don't introduce security risks. And this is why you have to have these multiple goals in terms of making the financial system more secure and more stable. You've got to be thinking about how do we make it secure? And one of the things I've always got to give a shout out to the Rust programming language, because that's one of the things that's super important, is what language is it written in. And I think it gets skipped over. But to me, these financial infrastructure platforms must be written in Rust, which gives you memory safety and gives you a lot better security.
Okay, so when you're talking about safety, we're talking about the essentially memory safety for people, because we have founders, we have crypto marketers, we have developers on here. For people that aren't maybe as familiar with the importance of memory safety, could you just go into why that's important, and like what is the, I guess, advantage of Rust in comparison to something like Solidity?
Well, Rust and Solidity do different things, but we talk about like Rust as a sort of alternative for writing infrastructure level platforms, right? So I think if you look at, there's basically research. If you look at, say, Microsoft Security Group or Google Security Group, they did two pieces of research about 5 years apart. I think Microsoft did it around 2019, looking at like where do the bugs in software come from? Where do the security flaws in software come from? And what they found was they come from memory safety issues. Like 70% of the bugs that they found came from memory safety issues. So a lot of that get exploited, security flaws. And that was research they did in 2019. And I don't think Google have repeated it and did it in around, I think it was this year or last year. Essentially came to a similar conclusion, like about 2/3 of the flaws in, systems level code come from memory safety issues. Like how do you handle memory? And the advantage that Rust has is because it's a memory safe language, but it doesn't sacrifice performance, because the way it achieves memory safety is different from, there are lots of memory safe languages like Go, for example, but they use something called garbage collection, which actually hits your performance. So a lot of people are reluctant to use it for that reason. So, So a lot of platforms are written in C++, which is very high performance language, but it's not memory safe. Then there are all these mitigants that you can get sort of stop these memory safety problems. But the Google and the Microsoft research found that even if you put those mitigants in place, they don't really affect the problem. The only way you can truly eliminate these problems is by switching to a memory safe language. And Rust has this combination of like speed and safety. And I think this is why it's one of like fundamental issues. And I think it just gets skipped over in a lot of discussions is like, what language are we going to write this platform in? And we're like adamant that these platforms must be written in Rust if you're going to get that security. Because if you're dealing with people's, money, assets, payments, transactions, it has to be this, secure as it possibly can be. So I always make a point of saying like, we have to start using Rust for all of these platforms.
Yeah. And the reason is it memory leakage or is it memory like poor storage? Is it because of the pointers issues in C++ where you have to manually allocate pointers? Or
essentially, yeah. I mean, without getting too much into the weeds in it, it's essentially how do the different languages manage memory, and Rust is much stricter than C++.
Got it. That makes complete sense. Okay, so we've got the Rust. We're writing the infrastructure in Rust, and that's helping us be way more memory safe. Then we're having the data be created. So let's talk a little bit about that data piece. So what kind of data are we pulling off the blockchain, or what kind of data is very important for this like infrastructure data AI model?
Well, I think there's the data that's coming off the blockchain itself, and also like what surrounding data have you got, like about pricing and all these type of things. And I think you want to make sure that the data, because a lot of the problems we have in the financial system today, and like, going back into my prior work, I dealt with a lot of like thinking about what's happening in the financial system in general. How do we work that out, right? And the problem is a lot of the data that comes off the financial system at the moment is has like sort of what I call structural problems. So the way it's structured makes it very difficult to ingest and automate and think about like how do we turn this into a complete picture of the system. So you'll get reasonably good data about like individual assets, but when you want to knit it all together into a picture of the system, that's actually quite difficult. And that's what you need both as a human being, if you want to say, okay, we want to build better tools so we can sort of see what the risks are in the financial system and adjust accordingly and properly price those risks. And that's an important element for making the financial system more stable. But also if we're moving into a world, and that's a bunch of standalone products you can build that people use and find useful. And that's one of the things that we're working on. But then the next stage after that is, how can a machine work out what's going on in the financial system? And I think what's interesting about financial services is that as an industry, it's much more susceptible to transformation by artificial intelligence than any other, because it's completely digital and it's very, very simple to work out whether you've won or lost, right? And I think those two elements make it very, very susceptible to, it's much closer to, say, chess than it is to driving a car. And when you think about like where AI really excels, it's in these very these systems where it can understand everything, everything's digital. So I think that if you can get the data coming off these chains better, the pricing data better, that flows into the AI, and then it allows it to learn and then execute. If it's, if the programmability is right on the blockchain, it can then execute decisions. So you've got to be thinking about it in that context, because when you're building these platforms, I think you don't want to be thinking in isolation just about digital currency for the sake of digital currency or tokenization for the sake of tokenization. It's got to be aimed at this larger goal of improving the financial system, better automation. How's that going to work? How are we facilitating that? So you have to think about data and you have to think about AI. What's good for an AI to ingest in terms of data? What's good for it to be able to learn? What's good for it to be able to execute decisions? And I think if you can think about all those three things in concert, it will help you even before you've even built one line of AI to think about that, to say like, what does the fundamental foundation need to look like to get that working properly in the future?
Absolutely. And I think many people that haven't worked in financial industries or financial services for that matter won't understand this idea of like, what do you mean the data is not like structured? What do you mean they don't have like a full picture of the financial ecosystem? Could you talk about like some of the problems? Is it that like information coming from like Thomson Reuters or Bloomberg, it's not structured, or all of these different assets have different structures and it's difficult to get a picture of it? Or is it that like, hey, there's an asset, then there's like bespoke derivatives and all kinds of products on top of that? Like, what would you attribute the data issues to?
I think it's a much more like fundamental base level issue about like how is the data coming off the core systems, and I think how do people, because I think people, the financial system is made up of a bunch of different pieces of databases across different assets and all the rest of it, and generally speaking, there are not great standards. So you're not thinking about like how do we make that so it's not just that it can be good data in and of itself, which is important, but how do we knit this data set to that data set, right? Because that's the important thing. If you want a complete picture of the whole system, you need to think about how do these different data sets fit together. So I'll give you an example. One of the programs I worked on, this was more than a decade ago at the Bank of England, was called the Legal Entity Identifier. And that's a very, very simple thing. But what it is, it's like every legal entity that transacts in the financial system should have a unique number. So when you're creating things like trade repository data, all this other stuff about like what's happening in the system, if you can tie the entities to a given trade with a single unique identifier, even if you're getting data off different systems, it will allow you to knit that data together and automate and all these type of things. And this is what allows a machine to see the picture of the system much better. So I think it's really about like what are the fundamental data standards that we're conforming to, and how do we think about knitting it together into a whole systemic picture instead of just thinking about it individual asset by individual asset.
Yeah, that makes a lot of sense. And then let's talk a little bit about the AI capabilities, because we've talked about infrastructure, we've talked about data, and how like there's fundamental changes we need to do to data collection. And then in this world, we've seen the growth of AI, and kind of what role do you see that playing in the ecosystem? Do you see in the future that there will just be AIs completely like trading or like seeking alpha in the financial markets, or how do you see AI kind of fitting into all of this?
I think it evolves stage to stage. So I think at the moment, we're still relatively early days of this, and I'm not like an AI maximalist. I think one of the people I really respect is Melanie Mitchell. She's a real specialist in AI, but she's sort of fairly skeptical about like how quickly it's going to progress. So I think that I sort of tend to take that view as well, that it's going to be powerful. It is powerful, but we have to sort of not think it's going to take over the world in the next year or anything like that. And also, it's much, much harder to build these things than people think. I think the sort of boosterism can get out of control with AI. But having made those sort of caveats, as I said, I think the financial industry is particularly well suited to the application of AI because it's purely digital. Winning and losing is very clear. So it's much, much more straightforward to build machines that can understand what's going on and be able to execute these decisions. In terms of where are we going to get with it, I think a really good book actually is called Deep Thinking by Garry Kasparov, who's the chess grandmaster. And chess is an interesting use case because, this came to chess much, much earlier, and we've been able to think much more deeply about it, like over, 30 years or something. And I think that allows you to sort of see a little bit into the future of how it's going to work for everything else. And I think one of the points that Kasparov made in that book was, what's interesting is it's not just machines on their own, but how they work together with a human. So it's human plus machine hybrid, and how's that going to work? So it's not necessarily that machines are going to push us out completely and we're not going to be doing anything, but it's like, how do we work? What are we going to be doing compared to what are they going to be doing? And I think what you're going to see in the early days, you're going to see it much more just looking at data, analyzing it, and say giving you some analytics about, okay, here's the top 5 things you need to think about, because that's sort of how chess computers work. Is they'll analyze like millions and billions of moves and say like, here are the top 5, and then the player will think, okay, of these 5, I think these are the best. And that's a good example of how man or human and machine work together. So I think it will start off something like that, where it's just the machine sort of analyzing the data and giving you some options. And then I think as time goes on and the machines get more powerful, they will start to make some of the decisions themselves, or they'll say, I'm going to make this decision. Does that look okay? And then you'll say, okay, go off. And then I think gradually you'll see more and more getting automated. And I think ultimately, if you want to talk 20 years down the line, I think a lot of what is done by people now will be done by machines, certainly in finance.
Yeah, absolutely. Well, we've had a few episodes where people have brought up the idea of AI smart agents. I don't know if you think that will necessarily be like a large field, but essentially these agents that you can program, and they'll do like multifaceted tasks, and they'll pretty much work with one another. It's quite interesting. I don't know how much you've looked into that.
I think we're still in the relatively early days of thinking about like what the AI would look like. But I think one of the things that I've been interested in is thinking about how do you like what I call multi-agent frameworks. So basically, how thinking about a bunch of different bots that are programmed differently, saying to them, okay, go and sort of give us your decision making, and then see which one actually does the best, and allow them to learn from each other as well as learning from the external market. So I think you could feed in like real market data and run like a simulated environment and see how all these bots play out, and then you'd see, oh, actually this one's done best, and thinking about how do you tune them for like market conservatism or aggression. Does that make any difference? How do you tune them for sort of what I call persuadability? So how much do they look at their peers and sort of copy them? Or how much are they independent? And I think you can tune a bunch of different things. And I think that's what we're thinking about is these multi-agent models, and thinking about how do you train these machines and see then play out over because we've got historic data, so we can see how they play out over generations of like trading and see which one actually did best. But I think that's sort of how we're thinking about it, but it's still relatively early days. And as I said, we're mainly focused on the infrastructure and the data stuff at the moment, but we know this is where we're going to end up.
Absolutely. And who would be like your target market for these solutions for the infrastructure and data piece? Would it be like financial institutions like BlackRock who are taking in tons of information? Would it be more retail users?
For us, it's mainly wholesale. I think that's been the focus of our work, and that's how we see our business. I think in the data business, that's generally how it goes. So yeah, we would see sort of big institutions or institutions that sort of are affected by these markets have to oversee them, have to regulate them, have to work in them as our primary customers.
And do you see that regulation as like a big driver in getting people to move, or is it more like, hey, I need to be able to see like my risk across my entire portfolio, or is it like, hey, if we don't see like these particular features, or like the data is not good, then we're going to get like slapped with fines by regulators?
No, I mean, when I say regulators, I mean more the tools the regulators themselves use to think about systemic risk, because that's my background. So I know that use case very well. So thinking about, okay, what tools can we build to help regulators see across multiple, see across the whole financial system? Because that was one of the constraints that we faced when I was working at a central bank, is how do you see the whole picture, the whole system? So that's one thing, that's one problem we want to solve. But I think in general, risk in the markets is something that regulators are obviously concerned with, and market participants are concerned with, because they want to be able to think about like what's going to happen in the future. Whereas the risk, how do we properly price that? Because I think if you want a better financial system, that's what you want, is you want people to see the risks clearly, risks not to be obfuscated, to be able to see clearly, both in terms of good visualizations, good tools, good artificial intelligence down the line. I think you want all these things. And then hopefully, and this is what we want, I think the reason why we're in this field is we want a better financial system, is that we can get a financial system that is much more stable in the future because the risks are much more transparent.
Yeah. And let's talk a little bit about, you mentioned systemic risk, and for people that are, maybe unfamiliar, what would be like an example of systemic risk and, kind of some mitigation that companies would have to do in order to protect against it?
Well, I mean, the classic was in the financial crisis. If you think back to AIG, was a insurance company that was basically insuring. So they were selling what we'll call credit default swaps. So basically, what that meant was that if a bond defaulted, they would pay out effectively the difference between whatever the default, after the bond defaulted and the sort of face value of the bond. So people use these CDS contracts to essentially, if they thought a bond was bad, they would buy the CDS on the bond, and then say, when the bond goes bust, we're going to get this big payout as a sort of financial trade. That's all fine and good, but the problem is that it was one company writing all this CDS for everybody. So in a financial crisis, when all these bonds, the mortgage-backed securities, residential mortgage-backed securities, were suddenly, people had these huge doubts about whether these things are ever going to pay out, and they would start defaulting en masse. It turned out that AIG couldn't actually pay because everybody had been buying from AIG, and nobody realized, oh, wait a minute, everyone's been doing exactly the same thing, and AIG will never be able to pay out these contracts. So the thing that I thought was hedging my risk has suddenly gone, and now I'm massively exposed, right? Things like that you should be able to see before you buy it. You shouldn't be just blindly buying. Everyone else is doing the same thing, creates this huge systemic problem that we can only see when AIG goes bust or is on the verge of bankruptcy. I think if you can get better tools, and if you could see, oh, wait a minute, AIG can never pay on this, it would give you an early warning of like a systemic risk building up before it actually happens, and then it would allow you to mitigate, both as a regulator, as a market participant. So I think if you have better tools, you'll be able to see systemic risk better, and you'll be able to adjust better instead of getting hit by it by surprise.
Absolutely. So let's talk a little bit about some of the challenges you faced as a founder. You're working at MIT and it seemed like some government agencies I thought I heard mentioned. Do you find it very difficult to leave like the academic sense and start your own company? You find like marketing, fundraising, all of that to be relatively difficult, or?
I think starting a company is difficult regardless of your background. I think even if you've done it before, it's difficult. So I think there's just inherent difficulties to it. I think any founder is going to have some strengths and some things that some people come from a marketing background, some come from a technical background, and so on. Me and my co-founder have a good mix of backgrounds, I think. So that was good. I think if you have the product and the sort of engineering side covered, you're generally you're going to be, that gives you a good chance of success, right? Mm. And I think we have that in the two of us. And, I think also because we worked together for a number of years before we started the company, we had a good sense of who the other one was, because I think that's another important thing, because it's the most important relationship in a company is between the founders. And that has to be strong, and you have to be on the same page about things. And then, navigating the market, I think, building products, what product are we going to build? How do you iterate that? How do you get it in front of users? How do you do marketing? These type of things. They're all challenges you have to face. And I think the way we approach it is that we try and do it step by step. So we started out, we had we built up our infrastructure business. That sort of became relatively stable, and now we've started with the data business. Now we can build that out of the infrastructure business, and you learn as you go as well. I think you learn much more about what products do people need as you interact and as you build things. You get to say, oh, okay, actually what we need is this and that, and then you get a real sense of, yes, I'm building something useful. But I think you need that continuous contact with customers, with the market. So I mean, the thing that I found the most helpful is dealing with people who actually have to, have a job to do in the market, and to speaking to them and think, well, what tools do you need to do your job better? And that helps you think about, well, how do we use the things that we've built to make that better system? So I think getting that loop in place is important. But yeah, I mean, obviously, building a company, managing finances is all. I don't think there's any easy way of doing it, whether you raise funds or you don't raise funds. They all come with different challenges, and you've got to have you have a lot more, how can I put it, sympathy for the position after you've done it.
One thing you mentioned is you worked on digital currencies. Of course, we've seen like a huge proliferation in currencies from projects are kind of tokenizing everything. Do you see that this is going to be largely a trend, or do you see that there will be like relative consolidation? Because it doesn't seem like, if I'm using AWS, that I necessarily need like an AWS token. But this is kind of what we see in the crypto sphere. So do you think that like digital currencies as themselves will continue to see this like birth, or will see relative consolidation?
I think we will see consolidation I personally think there should be, a purely open source alternative like a Linux, something like that. Because I think a lot of the software projects are tied to different cryptocurrencies, which I actually think muddies the incentives and, makes it quite difficult for anything to be widely used. Because I think people are wary, especially in, the existing financial industry. They're going to be like, well, if I use this, sorry, I've got a siren in the background. If we use this, are we going to be locked into using a particular digital currency in the future? I think they want to avoid that. So I think that's off-putting in some respects. But yeah, I think that we will see consolidation. I think that, but it's natural, right? I think this sort of like, let's try lots of different things and most of them will fail. I think that's just, if you look back to the 90s or the early 2000s with the web, that's basically what happened. Is people had a bunch of ideas and we thought, they tried a lot of different things. And then, a handful of those things became the big organizations or big, open source projects. And a lot of other stuff just fell away. So I think you're likely to see that pattern repeat itself in terms of I hope it will be open source and like purely open source. And that's what we want to build towards. Because I think we realized relatively early on that you can't have it tied to anything proprietary. I don't think that's going to work. And also it comes back to like, what world do we want to build, right? We don't want to build a world where somebody has control over the core infrastructure and then they can just sort of tax everybody that sits on top. That's not a good way. Because if you look at the web and the internet, they were completely open. And I think that's really been beneficial. I think that's what we would want to try and replicate here when you're thinking about building at the infrastructure level. So hopefully it will be all open source and written in Rust.
Yeah, hopefully. So you'll hear sometimes this criticism of like blockchain and cryptocurrency that like blockchain is a solution in search of a problem. Do you think, and you'll hear from the crypto side that like we're very early days, this is like the internet in the 90s. Do you believe that we're very early days and that in like 10 years, like cryptocurrency and blockchain will be a more prevalent technology? Or how do you kind of see things evolving?
I can see how people can form that view if they just look at digital currency or blockchain on its own. And they say, well, here's a blockchain. Let me go and do this. Off it goes, buy my token and we'll do this and that. I can understand why people are sort of skeptical because what's the point of this? But I do think that if you look at it in the context of greater automation, artificial intelligence, all the stuff we were talking about, then it makes much more sense because what it is the scripting language in those blockchains gives you automatic execution for an AI in the future. So if you're talking about, let's say an AI has made a decision about I want to buy or sell this asset, if you've got like a programmable infrastructure layer, it can then go and execute those transactions. Because at the moment, let's say how would it actually work today? Let's say we brought the AI from the future and said, okay, now we've got this very powerful AI that can do all this trading. It couldn't actually execute its decisions today because it hasn't got the infrastructure in place, right? Even if you could feed the data into it, even if all it could do is say, okay, to a human, go and make this trade or go and make that trade or go and do this or that or go and look at this risk. You couldn't actually like execute on its own. Whereas I think if you put the blockchain stuff in there and you have that execution layer, then again, it can go off, it can make decisions, it can execute, and it can sort of run much more autonomously. So it gives you that autonomy. Like I say, I think maybe we're a couple of decade or two in the future, but that's ultimately where you want to get to. But I think too many people, when they're talking about blockchain stuff, they talk about it in isolation. Or if they're talking about it in concert with AI, it's very sort of opportunistic. It's very opportunistic because, okay, AI is the new hot thing. Now we want to sort of close our next round of funding. So we're going to try and sort of shove it in there somehow. But I do think there is a natural fit between those two things. And I do think, digital currency blockchain it will realize its true potential once you get better AI.
Absolutely. And you talked a little bit about, asset tokenization. I think this is another area where people see, Larry Fink, for example, said that like we'll probably see most things be tokenized and on the blockchain for financial assets. Do you see that being the future, like real world assets coming on chain?
Yeah, I think so. I mean, I think everything ultimately, shares, bonds, everything, because it's just, again, it's a much more efficient way of handling that data. You don't have all these sort of patchwork of systems you're trying to sort of, think about how do they knit together. You can have much more straight through processing, all this type of thing. So I think there's an attract, and also from the financial industry perspective, it gives you much more capital efficiency, because if you can structurally knock out a bunch of settlement risk, then then all this capital that you've got tied up against those risks, you can then deploy much more efficiently. So I think there is actually a big economic driver for tokenization. And this comes back to better data. If the better data allows you to sort of unencumber a bunch of assets that are tied up against a risk because you have poor data, because you don't really know what's going on, or you have to wait or whatever, then if you can free that capital up, then that's going to be a much better financial system, but safer, because the risk has been eliminated in a different way structurally with this technology. So if you can do like payment versus payment, or in FX, or delivery versus payment in securities, if you can do that programmatically instead of having to do it institutionally, and it comes right back. If you think about, what we were talking about at the start with Bitcoin, like why is Bitcoin important, right? Because it allows you to shift away from institutions to software. That's like one of the most important things. things that you used to have to do with institutions, you can now do with software. That frees up a lot of capital you were holding against those risks, because now you can do it with, cryptography and programmability, instead of saying, okay, let's give our assets over to this person or this institution. They can do the swap, and then they can make sure that everything is okay from that perspective. I just think it gives you this huge amount, like tokenization gives you all those benefits. So I think that's why you've seen, I mean, it might even be, it'd be interesting to get your take on like when this has really picked up, but I've noticed tokenization pick up even in the last sort of 12 to 18 months. It seems to have got a lot more on the radar of like big institutions who've like switched onto it and said, oh, actually, this is not just some crypto thing. This can really help me in my business.
Yeah, absolutely. I think we've seen like Ondo Finance, and there have definitely been really interesting cases. And when Larry Fink starts talking about it, things are moving in that direction. I've definitely had a bunch more real world asset episodes lately and a bunch more interest in it. I would say for real world assets, in crypto, there's largely like a move fast and break things, which is tricky in financial industries, but the regulatory framework definitely has to be in place before a lot of these big institutions will come on board. It is my general opinion, and from what I've seen.
Yeah, it's that, and you want the good infrastructure as well. And this comes back to like how all the sort of what platform are we actually going to be used to transact these tokens? What language is it written in? What are the security requirements around that? Because you're absolutely right. People are, again, we want to build a better world, right? So if you're going to be transacting the assets underlying people's pensions, you have to be damn sure that they're, that they're solid.
Absolutely. So let's talk a little bit again about, Wadagso, and what are some of the, are there any exciting use cases you'd like to highlight about the company?
So we're still in the product development phase at the moment. A lot of there's on the infrastructure side, a lot of the work we do is confidential, so we can't really talk about it in a public sphere. But we're working away on the sort of base level infrastructure stuff that we've spoke about. The product side, again, we're hoping to have something ready this year. So maybe I can come back and talk to you about that when the first product's ready. But yeah, we've been working away on it. And again, it's like the type of stuff that I talked about with you is like, how can we price risk better? How can we look at assets? How can we really understand what's going on in the market and uncover where something is, if assets are mispriced, this type of thing. So I think those are the types of products that we're working on in the data sphere. There's data out there that you can use. So we've been working away on that. So hopefully later in the year, we'll be able to, announce something.
Absolutely. Well, everyone will keep a good eye on what you guys are building. And so finally, where can people kind of get in touch with you, keep in touch with the company, and see some of the developments you guys have coming up?
So the website's wadagso.com. I know that's very old fashioned to have a website, but contact, we have contact details on there so people can get in touch with us that way. We, in general, I think our approach with product launches is going to be try and be relatively low key, get it out there, and then make sure it's working, and then just sort of more broad announcements then. But yeah, I think what we're going to do is try and do, a few more podcasts, things like that. I think that's a good way of getting the word out. We'd be happy to, come back once those things are ready and say, okay, here's what we built and here's what we think, I think is useful.
Yeah, and if there's anyone listening in the audience, who would be someone you'd want to reach out to? Is it fundraising? Is it developers? Is it marketers? Who would you like to reach out to?
I think it's customers. It's people who work in the financial system and think about these issues that we've been talking about. How we're going to tackle AI in the future? How we're going to tackle this sort of base level infrastructure? How are we going to get better data products? So anyone who's interested in those things, and also I think open source developers are interested in open source development, and Rust developers we're always interested in talking to, because that's the other language we work in. But I think generally, if your motivation is how do we build a better financial system, and you want to think beyond the next token that's been released or whatever, and think about the fundamentals, anyone who's interested in that would be happy to talk to, because I think ultimately you can't do it on your own. It's not going to be one company doing it on its own. And we want a system that is more open. And I think ultimately when we talk about the infrastructure, I think what we'd like to see is better open source projects, which are completely unencumbered by financial interests. And I think down the line, we're hoping to release something like it's a bit more difficult for us on the infrastructure side because obviously the nature of our work and whatnot. But we're hoping, in the future, we can start to release some of the stuff that we've been working on. And we can say, this is purely open source, MIT licensed. There's no token involved. You can go and use it and build on it. Because I think we want to see a better financial system being built. And I think really that's the way to do it, is not to try and think that, ironically, for the financial system, everything can be made money on. I think some things should be open and free.
Absolutely. Well, if anyone's interested in Wadagso, I'll put in the description all of the links to get in touch, to get involved. If you're a customer or if you're a potential builder, shout out to all my Rust developers. Please get in touch with Rob. Rob, thank you so much for coming on to Building Web3.
Thanks a lot, Jax. Really appreciate it.